Dow Jones Futures. For some people, hearing those words brings to mind a confusing world of high-stakes gambling and costly mistakes. For others, it's a landscape of predictable patterns and profits. Before we continue, kindly hit the subscribe button to enjoy amazing content. So, what really separates a nervous beginner from a confident pro? In this video, we're going to follow both of them through the exact same trading day. You'll learn the absolute must-know basics for anyone starting out, and then you'll see the advanced strategies the experts use to get a read on the market. Stick around, because you're about to see how a few key shifts in strategy can be the difference between a winning and a losing day. Section 1. So, what are Dow Futures anyway? Our beginner trader looks at Dow Futures and sees a mysterious, high-stakes casino, a place to just bet on whether the market's going up or down. And you know what? They're not totally wrong, but they're missing most of the picture. The pro knows that Dow Jones Futures are actually powerful financial tools. Think of them as standardized agreements to buy or sell the Dow Jones Industrial Average at a specific price on a future date. These are traded on a major exchange, like the Chicago Mercantile Exchange, CME. For a professional, it's not just a bet, it's a strategic way to manage risk or gain exposure to the 30 massive blue-chip stocks in the Dow without having to buy all of them. Section 2, the pre-market plan. Our novice trader wakes up, scrolls through their phone, sees a positive news headline, and gets a jolt of optimism. They figure the market has to go up today. Their entire strategy is based on a gut feeling from one piece of news. Meanwhile, the pro's day started hours ago. They know that Dow Futures trade nearly 24 hours a day, 5 days a week, making them an incredible gauge of market sentiment before the opening bell even rings. They're analyzing how the market reacted overnight to economic data coming out of Europe and Asia. They've already checked the US economic calendar for big reports scheduled for the day, like inflation or unemployment numbers, because they know those events have the power to move the market in a big way. Their plan isn't based on a single headline, it's a global, data-backed perspective. Section 3, the first trade, strategy and size. Feeling that rush of confidence, our novice logs in and smashes the buy button. They don't really look at the contract type, they just want in on the action. And worse, they've put a huge chunk of their account on the line, hoping to score a big, fast win. This is one of the most common, and dangerous, emotional mistakes a new trader can make. The pro, on the other hand, is methodical. They choose their contract with purpose. For most individual traders, this is the E-mini Dow Futures contract, which has the ticker symbol YM. With this contract, every 1-point move in the Dow is worth $5. For traders with smaller accounts, there are even micro E-mini contracts, ticker MIM, that cut that risk down to just 50 cents per point, making it more accessible. The pro also has a clear strategy, whether it's day trading to profit from small daily moves or hedging to protect their stock portfolio from a drop. Above all, a pro never risks a devastating amount on one trade. Section 4, the unfolding trade, panic versus discipline. Whoops. The market suddenly reverses. Our novice trader watches in horror as their small profit vanishes and turns into a rapidly growing loss. They freeze, just hoping and praying it'll turn back around. Finally, when the pain is just too much, they sell, locking in a huge hit to their account. Their emotions made the final call. The pros saw the same reversal. But they didn't panic, because they had a risk management plan before they ever clicked buy. This is the single most important difference. The pro had a preset stop-loss order. That's an automatic command to sell their position if the market moves against them by a certain amount, protecting them from a catastrophic loss. They also had a profit target to lock in their gains. Their trade is a logical operation, not an emotional rollercoaster. While using leverage can amplify your gains, it also magnifies your losses, which is exactly why having a disciplined plan is completely non-negotiable. Section 5, the pro's edge, advanced strategy. So, How do the pros pick their entry and exit points with so much confidence? While the novice is chasing the news, the pro is using proven strategies. A classic one is called breakout trading. A pro will identify key levels of support and resistance on a price chart. You can think of these as historical price floors and ceilings. When the price finally and decisively breaks through one of those levels, it often signals the beginning of a powerful new trend, giving them a high probability moment to jump in. They'll often combine this with technical indicators, like moving averages, to confirm the trend's strength. It's about learning to see the patterns in the market, not just the prices. The gap between a losing beginner and a winning pro isn't about luck, it's about knowledge and discipline. If you're ready to stop gambling and start trading with a real plan, make sure you subscribe to our channel. We're always breaking down professional strategies just like this. And for your next step, check out our video on reading candlestick charts to start seeing the very patterns the pros use every single day. Don't forget to subscribe and share. As we saw today, the novice and the pro aren't playing in two different markets, they're just playing with two totally different mindsets. The novice was reactive, emotional, and flying without a plan. The pro was strategic, disciplined, and focused on one thing above all else: managing risk. Successfully trading Dow futures isn't about being right 100% of the time. It's about having a system that keeps your losses small and lets your winners run. So start by building your plan, understanding your risk, and learning one strategy at a time. Don't worry, the market will be here tomorrow.